Good morning. I am Lakshmi Patay MG, Assistant Professor of Commerce, Government First Grade College, Madhugiri. My topic is fire insurance claim. Under session number 2, I am covering the topic fire insurance claim. I am discussing about the average class and its significance and brief introduction about insurable interest. So first we know the meaning of average class. Average class refers to a clause included in an insurance agreement for the purpose of discouraging underinsurance of stock or any other assets. So fire insurance is a contract of indemnity. As a result, the owner of goods or stocks cannot claim more than the amount of actual loss sustained by fire. Under the circumstances, if the goods and or other assets are insured at a price which is either equal or more than the actual amount, the insurance company is liable to pay to the owner only the actual amount of loss sustained by fire and not more than that the way of compensation. In order to maintain the interest of the insurance company from underinsurance, a condition is imposed, what is known as average class in the fire insurance policy. The insurance company is not liable to pay to the owner of goods the full amount of compensation for loss of stock or assets sustained by fire. In other words, if the property goods is underinsured, the insurer shall bear only that proportion of actual loss as his insurance bears to the actual value of property at the time of loss. So what are the significance or importance of average class in fire insurance claim? The first significance is it is included in insurance agreement to discourage underinsurance. The second significance is the insurer bears only rateable proportion of loss. It safeguards the interest of insurer. It prevents insured to take underinsurance, and it encourages insured to declare honest value when insuring their stock. Therefore, average class refers to a clause included in an insurance agreement for the purpose of discovering underinsurance of stock or any other assets. When the insurance policy includes average class, the claim admitted by the insurance company is calculated by using the following formula. The formula is amount of claim is equal to policy amount into actual loss divided by stock on the date of fire. So how do you treat average class? What is the treatment of average class in fire insurance claim? If there is no average class, or if there is average class but there is no underinsurance, or even if there is average class but the entire stock is destroyed, then that time the amount of stock lost by fire is calculated in the following format. So first we take stock on the date of fire, and if any salvage, that is salvage means if any goods are protected from fire, that must be deducted from the stock on the date of fire. Then if any expenses are incurred at the time of fire occurrence, that is extinguish fire expenses, that expenses we are adding, and finally we get the actual loss of stock by fire. The actual stock of loss of fire we are obtained. If there is average class, and if there is under insurance, and if only a part of the stock is destroyed, then the amount of claim for loss of stock has to be computed by applying average class to the amount of stock lost by fire. It can be obtained with the help of the following formula. Amount of fire claim is equal to actual loss of stock by fire divided by stock on the date of fire into policy amount. For example, the value of stock on the date of fire rupees 10,000, and it was insured for rupees 8,000. The amount of loss is rupees 5,000. Therefore, the amount of compensation will be calculated by using the average class formula. That is, amount of claim is equal to what is the actual loss? 5,000. 5,000, what is the stock on the date of fire? 10,000. And what is the policy amount? That is 8,000. So 5,000 will be multiplied by rupees 8,000, then divided by rupees 10,000. Finally we get the amount of compensation will be rupees 4,000. It is very important to note that average class will be applicable only when the amount of policy is given in the problem and the amount of policy is less than the value of stock destroyed by fire, or value of stock is more than the amount of claim. We take some example. The godown of Sri Shailesh caught fire on 31/3/2019 as a result of stock of goods in the godown of the company were fired. Goods worth rupees 41,360 could however be saved from the accident. At that time, the Shailesh are supplied some information, that is stock on 1st January 2019 60,000 and purchases to the date 2,60,000, carriage paid on purchases 1,600, sales to the date of fire 1,80,000, and commission and average gross profit 33%. The company had fire policy 1,60,000 covering its stock goods in the godown. The policy is subject to average class. So in that situation, we have to find out the total loss of stock and the amount of insurance claims to be made. In that situation, first we prepare memorandum trading account for the period 1/1/2019 to 31/3/2019. Some items we are debited to memorandum trading account like opening stock, purchases, carriages, and commission paid to purchase manager 2% on purchases. that is 2,60,000 ಮೇಲೆ ತಗೊಳ್ಬೇಕಾಗ್ತದೆ. ಆ್ಯಂಡ್ what is the gross profit? 1/3 on sales. These are the items we are debited, and if any and sales are credited to memorandum trading account. So the debit side total is 3,86,800 and credit side 1,80,000. The difference is called a closing stock, that is value of stock on the date of file. And after completion of memorandum trading account, that account prepared to know the closing value of closing stock on the date of file. And then second, if any salvage are deducted from the value of stock at the date of file. In this example, 41,360 salvage amount, it will be deducted from closing stock on the date of file. We finally get 1,65,440, that is the amount to be claimed. And finally, in this problem, the value of stock is more than the insurance policy. Then the average class should be applied. The amount of claim is equal to actual loss into amount of policy divided by value of stock destroyed. So 1,65,440 multiplied by 1,60,000 divided by 2,06,800. Finally we get amount of claim 1,28,000 by using average class system. Next we have to discuss about insurable interest. What is insurable interest? It is one of the principles of insurance. This principle says that insured must have an insurable interest in the subject matter. The insurable interest in fire insurance must be present at both the times, while taking the policy and also at the time of suffering loss. A fire insurance policy is valid only if the policyholder has an insurable interest in the property covered. Such interest must exist at the time when the loss occurs. In several policies for the same property, each insurer is entitled to contribution from the others. After a loss occurs and the payment is made, the insurer is subrogated to the rights and interests of the policyholder. An insurer can reinsure a part of the risk. There are four principles of insurable interest. Is one of the essential ingredients of insurance contract. Is that the insured must have insurable interest in the subject matter of the contract. A person is supposed to have insurable interest in something when the loss or damage to that thing would cause the person to suffer financial or any other kind of loss. Therefore, insurable interest means that the insured must stand to suffer a direct financial loss if the event against which the insurance policy is taken does actually occur. The insurable interest is generally established by ownership, possession, or direct relationship. For example, people have insurable interest in their own business and vehicles, and not in neighbor's house, and certainly not that of strangers. For an insurance company, the insurable interest is the basic reason for issuing a legal insurance cover an insured or the beneficiary, as it gives legal rights to enforce an insurance claims. There are four essential components of insurable interest. There must be some property, right, interest, life, or potential liability which is capable of being insured. Any of the above, that is property, right, interest, etc., must be subject matter of insurance. The insured must have a formal or legal relationship with the subject matter of the insurance. The relationship between the insured and subject matter of the insurance must be recognized by law. In life insurance, everyone is considered to have an insurable interest in his own life and that of his spouse. And that of his spouse. Next, revision. That is, we in this session number 2, what we discuss to discourage underinsurance. An average class is included in fire insurance policy to safeguard the interest of the insurance we are studied. While taking fire insurance policy, insurable interest is present both at the time of taking and at the time of suffering losses. So these are the references we are using to collect this information. So thank you very much.